thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar, geopolitical, headline news, combination. But sometimes it gets even confusing out there when the market sentiment changes where good news is now bad news. So we try to get this information out there to you as to let you know what's going on, what's driving the market, and what to kind of expect what to come. And hopefully this will give you the information that you might be seeking. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. If we could be of any assistance in terms of refinance or purchase, uh, please reach out. We'd love to be able to help you out. But we'd also like to be a resource for you folks. So if you guys got questions about anything, again, please reach out as well. We're here to try to help you guys out. Uh, Without further ado, we'll just jump right into the report here. We'll start off with the economic calendar. If you watched my report yesterday, typically we would have had the ADP report come out yesterday, but they did move it over to today instead. So, Challenger layoffs. So these are announced layoffs, so we did see a reduction in that. It's something we don't really look at too much, but we can definitely glance at it here. So it did drop by about almost um, about 3.5 million. So good news that fewer people are being announced layoffs. But here's the ADP report. These is the private payrolls. So the month of April was actually revised lower. It went from 247,000 new jobs to 202,000. So that's a pretty big drop. And then we had a forecast of 300,000 for the month of May, and it came in much shyer at 128,000. So it was a pretty big miss right there. Jobless claims. Last week, report was at 210,000, but it was revised slightly higher to by 1,000 to 211. Forecast is supposed to keep that same pace at 210, and it dipped down to 200,000. So we dropped 11,000 people by, well, basically, we had, but last week, only less than 11,000. Excuse me, I'm having a hard time getting that out this morning, getting that out there. But anyways, 200,000 people applied for unemployment last week for this week's report. Now, continued claims, this is the good news here, is dropped. So we went from 343 million down to 1.309. So almost by 40, a little less than 40,000 people dropped off there from one week to the next week, which is good news right there. Now, here's some important data we're going to be looking at. Labor costs for the first quarter. So the first revision came out 11.6%, and forecast was supposed to come in at the same, but it increased by 1% to 12.6%. So our labor costs for the first quarter, and this is inflation data, that's why it's important, and that's the big headline news for the past over a year, probably a year, inflation. This is inflation inducing. Labor costs went up 1%. So this is the final. Yeah, I don't think this is the final revision. I think we got one more revision coming in here in June. And, well, it is June now, but towards the end of June. Then we also got the productivity revision. So we had 7.5%. Forecast count for 7.5%, and it came in at 7.3%. This is a drop in productivity. So again, not good news right there, where we're seeing a decrease in productivity for the first quarter. But that was a slight improvement in this case. Factory orders. We had 2.2% increase, but lowered down to 1.8% month over month for the month of March. April has gone for 0.7%, and it came in much higher at 0.3%. So not the greatest report overall. I mean, must say, productivity sucks, to be honest. Labor cost sucks. And then you see jobless claims still relatively high, but ADP came in much lower than expected. So overall, not great news there. However, stocks are up. They've been taking, we've both been taking a bit of a beating the last 2 days, but they're kind of rebounding. So basically, buy on the dip. So people are investors coming in buying on the dip. Microsoft announced some not so good forecasts, basically due to the higher dollar. It sounds like and their international sales is going to decrease their overall sales for them for the higher cost of dollar. Then we also have a few Fed members talking today, including Lael Brainard, who's the vice chair. So she's kind of second in charge of the Fed chair, and she's basically not in favor of a pause. She wants to continue with the rate hikes. So so of course the markets are listening to what she has to say. Currently, bonds are up 14 basis points. Yesterday we did challenge the 25-day moving average. We did kind of touch off it earlier today. We're kind of going the sideways pattern right now, but it's enough to kind of improve a little bit of pricing from where we left off yesterday. We did close down 34 basis points yesterday. But again, we gained some of that drop yet today. We're improving a little bit today, which is good news if you're in the market for a refinance or purchase here. Treasuries. Again, treasuries are still above its 25-day moving average, sitting at about 2.92 here. And last but not least, we'll touch on what's the average rate for a conforming limit here in the U.S. These are delayed by a day. It's based more off yesterday's data. And then also they do have points built into it, so they're not in 1/8 increments. So the 30-year fix is at 5.47 now. So we could, and the 15 years at 4.82. So on average, we're approximately in the mid 5% range and high 4% range for the 15-year. All right, folks. Again, we're here to help you guys out. If you guys have questions, we can be of any assistance. Please reach out. We're here to see what we can do for you, folks. In the meantime, if you guys like these videos, please help us out. Smash that like button. We greatly appreciate if you guys could share us. And you guys have a great rest of your day. Thanks so much for watching. Catch you guys tomorrow's video. Bye-bye.